Hello and welcome to today's webinar. A little housekeeping before we begin. Everyone is needed during the webinar. All webinars will be recorded and sent out to all attendees after the webinar has concluded. Tomorrow, the recorded webinar will be sent out to all participants. There will be Q&A at the end of the presentation, but please feel free to ask questions during the webinar by clicking on the Q&A box at the bottom of your screen. Once the presentation concludes, I will ask the questions presented in the Q&A box or chat feature. I may not get to everyone's questions, but we will do our best. With that being said, I would like to introduce you to Ruben Franco, President and CEO of the Orange County Hispanic Chamber of Commerce.
Thank you, Edna, and welcome to Comerica Business Sense Recovery Bootcamp. The Orange County Hispanic Chamber and our Small Business Development Center, we've been around as far as chamber for over 35 years. Our development center has been around for 5 years, and we typically are busy helping people start, fund, and grow a business. Obviously, over the past 14 weeks, it's been more in survival mode of how we help people get the PPP, the EIDL loans, and what they can do to survive this pandemic. This webinar today is going to be talking about alternative financing and things we're going to be able to do going forward as we've done the PPP and the EIDL, but what other type of funding is out there available for you as a business going forward. So we have a great lineup of panelists here, and I'll introduce them in just a bit. But first, I want to introduce to you David Bentoncourt he's External Affairs Market Manager for Southern California for Comerica Bank. And David, we appreciate the partnership and you doing this. So David, it's off to you.
Thank you, Ruben, and good morning, everybody. Thank you for joining us today. Comerica Bank is a proud supporter of the Orange County Hispanic Chamber of Commerce and the SBDC program there. We're committed to supporting small businesses, and this is just one example to demonstrate our commitment. We're really grateful for the partnership, and I'm really excited for today's training specifically because we have a great panelist put together with Main Street Launch, Small Business Development Corporation of Orange County, and then our very own Community Development Advisory Committee member and AMPAC Tri-State Business Capital. So we're extremely happy and proud of this partnership, and we really are really happy with the work that Ruben and his team are doing in Orange County and Inland Empire region. So thank you all for coming once again. And with that, Ruben, I'll turn it back over to you.
Thanks, David. Appreciate it. Appreciate the partnership. Like I said, we have a great lineup of panelists, and let me introduce them all at once first, and then we're going to have Hilda go first. But Hilda Kennedy is the founder and president of AMPAC Capital. We have Darius Mahajer for SVP Regional Lending from Main Street Launch, and we also have Nestor Correa, SVP of the Small Business Development Corporation of Orange County. First, we're going to have Hilda kick it off. Hilda, thank you for being here, and we appreciate your leadership on this.
Thank you so much, Ruben, and I am delighted to be here and always grateful to partner with the SBDC, and so grateful for our partnership with Comerica and their commitment to small businesses. So love to start with my first slide. So AMPAC Business Capital was established in 2005 as a nonprofit organization. And in 2007, we became licensed or certified by the U.S. Small Business Administration as an SBA 504 lender, where we finance commercial real estate and equipment in partnership with the local bank or credit union or non-bank lender. In 2016, we became an SBA micro lender, providing loans to businesses under $50,000 for startups to early start to existing businesses. And in 2017, we became a CDFI, also focused on small businesses and doing training and business coaching for those businesses in a quarterly capital assistance program where we're helping our clients to continue to grow and facilitate their long-term success in a collaborative environment where we were doing workshops in our office, and it became kind of a mastermind group for those businesses that were participating. And now we're doing those via Zoom and other platforms as in a webinar. So on this slide that you're seeing the programs from the CARES Act and post-COVID-19 activity, what we've been doing, we're a PPP lender as a CDFI and a CDC, and we're focused on loans under $50,000. And we really wanted to target those clients who were sole props or single member LLCs that from all of the headlines that you read and were true, they were not getting access to these PPP loans like larger and more mature businesses. So to date, we started in this program late in the game because that's when they allowed us to participate. We've done about 73 loans. I think that number is higher today, but our average loan size is $17,000. We funded $1.3 million. We're probably on track. June 30th is the sunset date. We're probably on track to do right around $2.5 million in loans, right around that average loan size for those businesses. Since the program sunsets June 30th per the statute, we have stopped accepting new applications and are really trying to help get the businesses that are within our pipeline served before that deadline. If we had a client, particularly in an underserved community, that needed assistance, our team is geared up to try and take those applications, and the individuals who are interested would simply call our office, and I'll give you the contact information at the end of the call so that we can serve them, especially if they're coming through the SBDC. We really want to try and get as many businesses in underserved and minority communities through so that they can access the PPP loan. As a partner, since we are headquartered in Grand Terrace, which is in San Bernardino County, we've also looked for ways for us to serve and support our local governments. And so with the County of Riverside, we have administered on their behalf a COVID-19 loan program where they got resources from EDA, the Economic Development Administration, and Community Development Block Grant Funds. So we were funding businesses up to $30,000 at 3.75% interest in a 5-year term who needed resources and had not been able to get those from other places. And then we were helping businesses through community development block grant funds who lived in a certain area and met certain income requirements for under $15,000, and those loans are forgivable. We've done funded about $500,000 in that program. We'll fund another $250,000 through the CDBG component. And they're working on an additional tranche of funds to help businesses in Riverside County. So if there are any businesses that are on this call that are in that area, we'd be happy to talk to you about that program. We are, as I said, an SBA micro lender. And so through that program and through all of the SBA programs today, any new loan that's funded, any new SBA loan that's funded before September 27, 2020 will get debt forgiveness, meaning that government through the CARES Act is going to make your loan payments for 6 months following the date of funding that loan. And the SBA microloan is one of those, as well as the SBA 504 and refinance. And I'll talk to you more about that on the next slide. As a CDFI, we provide loans up to, typically up to $100,000. Today, we're doing those up to $75,000. And for those loans that are in our portfolio, because of COVID, we have done debt deferment opportunities and debt forgiveness for some of those loans, thanks to the generous support of our sponsors like Comerica Bank to help us to serve businesses at this time. So pre and post COVID-19, we have the programs that are noted on your screen. Again, the SBA 504 program for commercial real estate and equipment. Someone is renting, it's a great opportunity for you to buy your building. And if you buy your building and it is funded, again, before September 27th, and that window is closing quickly, then that business can take advantage of debt forgiveness. And even if that is not the case, where you can't fund before that time, the interest rates are so incredibly low, it's such a good time to consider buying. On the SBA second trust deed, the interest rate today is 2.59% fixed for 25 years. And I was on a call yesterday and some training yesterday, and the predictors, the economists are saying, who pool the SBA loans, are saying that those rates could still go further down, which was really interesting. Of course, they don't have a crystal ball, but certainly 2.59% is pretty incredible. With the SBA debt 504 debt refinance program, businesses who own commercial real estate and they have a conventional loan or conventional loan on equipment, this program allows that business to refinance that commercial real estate and even pull cash out for general business operations. And different from PPP or EIDL, this program is an ongoing program, and it allows you to pull cash out for where you can be really flexible about those business expenses. So we're really seeing more activity around this program. The second trust deed financing, again, this public-private partnership, today's rate is 2.59% fixed for 25 years. So it's a great opportunity if you have a hard money loan or seller carry or conventional loan, and you're trying to restructure your debt. It's a great opportunity to restructure debt for the long term so that you can free up cash. On the SBA microloan side, we're doing those loans up to $50,000. Our rate is 4.5% fixed today over a 6-year term. And again, that debt forgiveness provision that I talked about is available to businesses. We've been doing to support businesses who have PPP loans. We've been doing a Forgiveness Friday webinar in partnership with a CPA firm and a payroll company so that we can educate people on the latest provisions associated with forgiveness, especially these small businesses that don't have their own CPAs, they don't have their own CFO, and we're really trying to help the businesses that we are serving with that loan program. And our next forgiveness webinar is not on a Friday, it's on a Thursday because of the holiday on July 2nd. And then we are launching post-COVID-19 recovery webinars for the businesses that we serve so that we can help them consider what are your COGS, what ways can you negotiate some of your lease agreements, really trying to make sure that these businesses are in the greatest position for recovery and then for thriving in the future and planning for future, hopefully not pandemics, but emergencies and issues that come up. So happy to answer any questions at any time, and share my contact information at the end of the session. Thank you.
Thank you, Hilda. That was very informative, and we appreciate your leadership of what you've been doing out there. CDFIs are a great resource for all of us, for all our small businesses. So thank you very much. Next on the panel from Main Street Launch, we have Darius Mahajer. He's the SVP for Regional Lending here, and Darius has been great working with us at our SBDC, and we're very excited to have him and hear what he has to say today. Darius.
Yeah, Ruben, thanks for the invitation again. Pleasure to be here. Good morning, everybody who's attending. Thank you, Comerica, for your sponsorship and continued efforts in the small business community. My name's Darius Mahajer. I'm the Senior VP for an organization called Main Street Launch. Been with the organization for 10 years. We're a statewide lender, nonprofit lending institution very similar to AMPAC. Ruben, I'll go ahead and take the next slide. So again, we are a nonprofit. We're headquartered in Oakland, California. We've been established since 1979. So we just celebrated 40 years last year. We recently expanded into Southern California. Northern California was our kind of where our deepest roots are. I moved down here 2 years ago to expand on our veteran lending initiative, which has now turned into a small business lending initiative into the entire small business community. Headquartered in Oakland, California. We are an SBA preferred lender. We've been doing SBA microloans for, probably 10, 15 years. SBA Community Advantage, which I'll talk about in my next slides, for about 7 to 8 years, or since the birth of the program. We are funded by the Department of Treasury, Small Business Administration, various municipalities around the state, banks such as Comerica and others, foundations and philanthropists, to really deploy that capital to small businesses who aren't yet bankable, whether they're a startup business without enough time and without enough historical financials, or an existing business that isn't quite yet bankable for a wide array of reasons, which I'll get into in my next few slides. And you'll see 10-year snapshot, we've deployed over $60 million to over 700 businesses that created 6,000 jobs. Next slide, please. So from a programmatic perspective, we really have two tranches. It's lending and technical assistance. You'll see lending is a little bit more active as we rely on our partners like the SBDC to kind of carry more of the weight from the technical assistance standpoint. Technical assistance is basically assistance from a wide array of categories, from business planning to financial forecasting to lease negotiations and loan packaging and what have you. So we offer that on a limited basis, really to get folks loan ready and make sure that their business does succeed. It is free. We have a dedicated technical assistance provider who works with our existing portfolio for the life of your loan. So if you're a Main Street launch client, you have a 6-year loan term, let's just say, then for those 6 years, if you have any issues, you can contact us and receive free assistance. From a lending perspective, the first two bullet points you'll see start with SBA. These two are probably going to be, these two are intended to, in our current economic crisis, are more of a recovery loan program. So as the dust settles, as businesses start to pick back up and the economy starts to open back up, these products are going to be more leveraged than they currently are. SBA Community Advantage is our kind of bread and butter product. It falls under the flagship loan program of the 7A product. It does go up to $250,000, 10-year loan terms. And as Hilda mentioned, rates are very, very low. And, our rates based off prime plus 3%, which right now Wall Street Journal prime is 3.25%. So you're looking at 6.25% for a small business loan over a 10-year term, which is very, very competitive. And these loan products are intended to cover most business expenses, whether it's acquiring a business, working capital, furniture, fixtures, equipment, paying, employees and what have you, supplies and inventory and such. So very flexible program. The SBA micro loan program that we offer is capped at $50,000. It holds a term of 6 years with a fixed interest rate of 7.75%, and also very flexible uses for this program. During the COVID-19 pandemic, we have really kind of tapped back into our origins of being a partnering with our with various municipalities. We started in Oakland, California, and we've moved to San Francisco. And during the pandemic, the need for local cities to get involved in assisting, small businesses in their areas was more and more important. And I was very impressed with kind of the outreach that we received and collaborations we were able to procure during this, unfortunate circumstance. But from Oakland to San Francisco, we expanded into Stockton, California, and Mountain View with an emergency relief loan. And most recently, I think on Monday, this coming up Monday, and you could check our landing page on our website, we are launching a $28 million grant program for the County of Orange. And for Riverside County, we just closed out phase 1 on Friday night with about 2,000 applications for approved businesses of a $45 million grant program. Phase 1 will probably deploy about $7.5 million in grants, and phase 2 is launching June 29th. So I encourage everyone in Orange County and Riverside County that's on the call to check out our landing page and definitely apply. The eligibility requirements will be on there, and it's pretty straightforward and intended to be a rapid deployment. For Orange County, I think for both counties, the grant sizes are capped at 10,000, but they are grants and you don't need to pay them back. In San Francisco, we have a $10 million loan fund. I know that's not relevant to this call, but it just kind of indicates, kind of the work that we're trying to do within these cities and these small businesses that have been impacted during this pandemic. Next slide, please. So the qualifications, I went over most of them. I'm not going to spend a lot of time on this slide. For the SBA programs, it's really intended for more long-term capital used to rebuild post-pandemic. And it does require the 5 C's of credit, which is interesting. I will talk about the 5 C's of credit in my next slide. But it's not, from an SBA perspective, if you're seeking disaster relief funds, the SBA Economic Injury Disaster Relief Loan, or EIDL, and the PPP program, which Hilda was discussing earlier, are really the two the SBA EIDL's the program that is being intended to offer disaster relief, and it just reopened last week, I believe. The SBA EIDL goes up to $2 million, I believe, and it holds up to a 30-year loan term at 3.75% fixed. So very, very competitive terms. And I encourage anyone who hasn't applied that is still, being negatively impacted by the pandemic to go onto the SBA's website and apply for EIDL. It's like I said, a very competitive product that you could take advantage of at this time. The municipal emerging loan funds and the grants, these are, again, businesses that have been impacted by COVID-19. They are restricted to certain cities and regions that offer these types of products and typically hold a very streamlined application. Next slide, thank you. So for the 5 C's of credit, I'm going to run through these relatively quickly, but this is what typically lenders ask themselves when analyzing the viability of your business repaying the loan. And the first one is one of the more important ones, which is cash flow. Can your business repay the loan? And that's, you're generating sales, you have your operating expenses, and then you're left with a net number, right? And that's presumably your profit. And what we want to make sure is that your profit's sufficient enough to cover your operating expenses and your loan repayment. And of course, in these times with businesses being closed and restaurants only being able to operate in under 50% capacity, it makes it challenging to underwrite through a conventional lens. So, That is why there are emergency relief funds available. That is why PPP is, was established, and the SBA EIDL program, and the various cities that have created their own relief mechanisms are established, because the use of capital during this pandemic doesn't match the source of capital from when you're talking about a conventional loan program, because again, we have to follow these 5 C's of credit. Characters can be thought of as synonymous with your credit score or your credit history. Main Street Launch doesn't hold a minimum credit score requirement. However, we do look at your credit history. We want to make sure that you've been responsible. So in a lot of cases, your credit score will dictate your history, because if you have been irresponsible with your credit in the past, your FICO score will be lower. So make sure you're familiar with your credit. Annualcreditreport.com is a good source and channel to see what your credit looks like. And I always encourage folks to know what your credit looks like prior to engaging a lender. So that way the communication can be clear, transparent, and cut straight to the point. So if there are issues that need to be resolved, you can work on those. Collateral is, it's what happens if you can't pay back the loan. It's a second kind of security for a lender, aside from the cash flow of the business, to recoup any losses if your company were to close. From Main Street Launch's perspective, we are not a collateral-based lender. It's a tertiary, it's probably at the bottom of the totem pole. If we look at this from a, importance level, you do want to be educated as a small business owner if you are seeking a loan, what lenders are looking for. In some cases, lenders want to be fully collateralized, or they like, possibly to take a vehicle that's fully paid off as collateral, or a home, or some tangible good. Other lenders look at your receivables if they're financing contracts or purchase orders. So just be educated with what lenders are looking for from a collateral perspective. And capital can be thought of as a down payment. How much cash do you have to contribute to the loan? Typically, the magic number is 10 to 20%. Again, this is all conventional in a post COVID-19, and a lot of these loan programs now do not require any down payment. If you're an existing business that's been impacted, you're not going to have to worry about this. In conditions, why do you need the loan? What's currently going on? Well, the conditions are quite extreme at this point in time, and have been for the last several months with the pandemic. So again, we want to match the source of capital with the use of capital. So if your business is closed, let's talk about what program fits your needs. If your business is now reopening, maybe some other, you'll have some additional items or additional loan programs available to you. Next slide, please. Again, I touched on this. If your business is closed, EIDL, it's a program that you're going to apply directly with the SBA. We are directing folks to that website, PPP. AMPAC is a participating lender up to $50,000. There's a lot more. I'm seeing a lot more PPP loans going out than the first tranche. The first, I think it was, $3 trillion that went out in the CARES Act. There was only, I believe, 1.6 million businesses that received a PPP facility out of the 350 plus million businesses in the United States. This go round, I'm happy to see that a lot more businesses are obtaining the PPP program. However, it is a product that's intended for payroll, and it converts to a grant, and there's always more room for assistance. So I'm sorry, can you go back one more slide, Ruben? I think there was one more bullet point. Okay, and then I think I've discussed the municipal emergency loan funds and the grants enough. Check with your local city government if there are programs out there. Clearly there are down here in Southern California, but it could definitely be used as a a bridge kind of loan and also a participating facility to PPP. One of the nuances with some of these municipal and city loan funds is that they are being run through the iBank, which is a 95% state guarantee program. So lenders are more secured because these are obviously more high risk loans that we're making during this pandemic. And one of the restrictions is if you did receive PPP or EIDL, you don't qualify for the state guarantee program. So I'm seeing a lot of businesses not being able to qualify for, let's say, our San Francisco loan program because they did receive some amount of the PPP or the EIDL. So I know that's in discussion right now, and that may change in the coming days or weeks. It's still to be determined, but nonetheless, just check with your lender, check with your city, check with us if you'd like to on kind of some of the restrictions and guidelines there. Next slide, please. So a quick shout out to the SBDC. Since we're talking about alternative financing, we're talking about businesses who don't qualify for conventional bank finance for whatever reason. SBDC has been a huge partner and asset to our organization from an aspect of assisting our client, our soon-to-be clients or would-be clients with planning their business, tightening up their financials, their projections, packaging the actual loan application, working on lease negotiations with landlords or property management companies. So really leverage your local SBDC network. If you are looking for lending or not even looking for lending, but I mean, these guys offer, we're already paying for their services. These are tax dollars hard at work. So I really tip my hat off to the SBDC.
Thank you, Darius. We appreciate the partnership and the great information there. Next up, we have Nestor Correa he's a senior vice president, for the Small Business Development Corporation of Orange County. We've been a longtime partner of the Orange County Hispanic Chamber, him and Michael Ocasio. We appreciate that partnership. Nestor, it's off to you.
All right, thank you. I want to thank Comerica and the Hispanic Chamber for putting this together. I was wondering, can I share my screen instead? I made a little change to the PowerPoint.
Yeah, go ahead.
Do you know if you can do that? Okay, great.
Can you see it?
Yeah.
Are we good?
Not yet.
Okay. Can we see that? Does everybody see that PowerPoint? Hello?
No, not seeing
No, I don't
anything.
think your screen's sharing.
Okay, I thought I did. Let me go back here. Okay, 1 second. Sorry about that. Okay, let me minimize that. And I press screen sharing. Okay, here we go. Okay, so, okay.
There you go.
How about that?
There you go. I can see it.
Okay, sorry about that, everybody. Okay, thank you very much again, as I said, for including us. We like to work with Comerica and the Hispanic Chamber, and the Small Business Development Corporation of Orange County. This corporation was started 17 years ago in Santa Ana, and you see, there's our contact information in our website. So the Small Business Loan Guarantee Program was started back in 1968 with the idea to help promote small businesses, small minority and women-owned businesses. So the program started off with about $40 million back in 1968, and it was run by the banks. The banks were submitting guarantees. In 1977, the state decided to take it away from the banks because I think we had a little bit too many defaults. And they created what they call financial development corporations. There are 7 throughout the state of California. We're all strategically located: San Diego, Orange County, LA, Fresno, Sacramento, all the way up to the state, okay? So the program, we have 7 FDCs, and we can all do loan guarantees. So we provide loan guarantees very similar to the SBA 7A program. And again, the loans guarantees are for both term loans and for lines of credit. It helps improve the tax base in which the state generates income. Okay, so the maximum guarantee is $1 million or 80% of the loan amount, whichever is less. Okay, we can do lines of credit and term loans up to 7 years. So we have done lines of credit that are multi-year, not just 1 year at a time, but maybe 2 years at a time. And the funds can be utilized for all business uses. Okay, working capital, equipment, business expansion. You can buy real estate and other business uses. Okay, the credit history should be satisfactory. Okay, but we can work with the credit history depending on some of the issues that the credit might have. The collateral that we take is the best collateral available. We'll take obviously we always take the business collateral, but there could be some outside collateral that we can take to strengthen the transaction. On some of the smaller guarantees, we've taken vehicles. Of course, the larger guarantees, we take real estate. So that's the specifics on the program. The industries that we serve, okay, are all your main industries, okay? What we don't do is we don't do, adult entertainment, firearms, things of that nature, or anything that has to do with commodities or speculation. We don't do anything like that. Just your basic businesses. What makes us different than the SBA is that we can do nonprofits. I know that the SBA is doing disaster loans for nonprofits, but traditional loans, you cannot get a loan for a nonprofit through the SBA. So that makes us a little bit different, and we tend to, our organization in Orange County, we do the most guarantees to nonprofits than anybody in the state. So we do provide a lot of nonprofits with working capital, money to buy their buildings, to secure their facility expenses, things of that nature. Okay, so here are the top lenders that we have in the program. There are 80 community development banks. And I say community development banks because you don't see the Wells Fargo and B of A's of the world in this program. They typically use SBA and they don't use our program. But as you can see here, there's a list of banks here. These are the loans that are done on an annual basis. And of course, you see the date on there is a little bit old. With the state, the information from them comes a little bit slowly. So this information is from the first quarter of 2019. And not only banks participate in the program, but we can also have CDFIs participate in the program. And we are located in Orange County, but we can do a guarantee anywhere in the state of California, wherever our client is. And typically our clients are the banks, the lenders, not the borrowers. So we're able to do loans throughout the state. We can do loans in Northern California. The Northern California FDC can also do loans in Southern California. We do try to stay within our region, but depending on the relationship with the lender, we sometimes go out of the region. Okay, this is a slide that shows us the difference between us and the SBA, okay? So for example, franchises, and I use 7-Eleven because that's a franchise most people recognize. The SBA does not do loans to 7-Elevens, mainly because on a 7-Eleven, you cannot take the business assets. All of the assets are owned by 7-Eleven, so you cannot take a UCC filing. We work with 7-Elevens and we take personal collateral to strengthen the transaction, but we can do almost any franchise. The property doesn't have to be 51% owner occupied. It could be less. I've done one where it was only 20% owner occupied, happened to be a strip center where the owner had a convenience store on the location and he only had a 20% occupancy. So that was eligible. 912 issues. If you're an SBA lender, you understand that sometimes 912 issues can take time because you have to get clearance from Washington, D.C. Sometimes that can be very quickly, and sometimes that could take months. With us, as long as it's not a crime of moral turpitude, we work with that. For example, if the person was arrested, 20 years ago for smoking pot or something like that, we can work with those issues. Okay. This is a good one here. Previously federal loan defaults. Okay. So, for example, when you think of federal loans, people are thinking about the SBA. Well, it's not just the SBA. When you buy a house, you can get a federal loan, an FHA loan. Student loans are also federal loans. So if a borrower has defaulted on an FHA loan, an SBA loan, or a student loan, it does not pre-qualify, it does not preclude them from working in our program. We can work with them. That's not to say that we're going to do all these loans that they defaulted previously with the federal government, but we will entertain them and take a look at them so they're not deemed not eligible off the bat. So we can work with them. Another reason why lenders use our guarantee program is because they've reached their maximum with the SBA. So they come to us for a guarantee. We can also do refinances. Now, this is a little bit old because I know that that the SBA is now allowing refinances, but we don't have to have the waiting period when it comes to a refinance. We can do the refinance right away with the borrowers. I did mention nonprofits that are eligible with the SBA. The normal SBA loans are not eligible, but right now for the disaster loans, they are. And high net worth borrowers. We like high net worth borrowers. They can pay back the loan. So that's also an eligibility that we have that is not eligible with the SBA. Now, we do have the disaster program. I didn't put up that slide, but we do have the disaster program that was mentioned earlier. And the information is correct. The way the governor announced the program, he stated that the borrower would have to be eligible, have to be declined by the SBA or PPP in order to qualify for our program. We believe that that's going to change. We're having a meeting on Friday, and we think that's going to be changing. So once that does, we will go ahead and roll out the information on that. And what we're hoping for is that even if a person was approved for SBA or PPP, that doesn't mean they got the full amount that they needed. So we'll be looking, we're hoping that we're able to look at some of these transactions where they were underfunded. So we're looking forward to hopefully that happening soon. But we have $100 million set aside to do loan guarantees of $50,000 or less. It's a 95% guarantee to the lender. I mentioned earlier that we have over 80 lenders throughout the state. So far we've only, our center in Orange County, we processed 56 transactions for about $3.5 million. It's not very much. Because again, the banks are not looking at taking on new clients right now. They're working with their own clients. They've done some guarantees, but the majority of the guarantees for disaster that we've done have been with the CDCs, the Community Development Corporations. And we're looking at partnering with Hilda, hopefully soon, to penetrate the Inland Empire. So right now we've got a few CDCs that are working a program. We're trying to convince banks to work with us for that. Of course, underwriting is going to be a little different. We will look at for these transactions, we will look at 2019, which was hopefully a good year for most businesses to qualify them for financing. So the disaster program hopefully will be changing soon. The CDCs that we're working with, unfortunately, have limited funds. They can only do so many loans. We don't see that changing much. As far as the state is concerned, all 7 financial development corporations have done transactions. So I would imagine that we've done at least about $20 million worth of disaster loans, I would imagine, if not more. But we also have our regular program as well that we can use to help small borrowers as well. With the state program, the disaster program is different than the SBA EIDL program. It's up to the lender on the deferment, if he wants to defer the few payments at the beginning or do interest-only payments. But it will be a 7-year loan at 4.25% for 7 years. So that's the program that we are going to be working with. And we do regular loan guarantees for small businesses. As I mentioned, $1 million is the maximum guarantee amount. So if the borrower needed a $2 million line of credit, we can provide the lender with a 50% guarantee. So hopefully we come up with some good news this Friday, and we'll make an announcement to everybody. And we'll be able to take on quite a few of these, I call them micro disaster loans. Okay, so with that, there's our website. I want you to check out our website. There's a contact information section there where they can submit. Currently, we have a list of about 280 people that have called our center that are looking for disaster loans, and they're mostly out in the Orange County area. So but unfortunately, quite a few of them are waiting for EIDL loans and or have received PPP, so we can't help them. So we're hoping that changes going forward. So that's the guarantee program.
Thank you, Nestor. That was very, very informative. Appreciate it. Hey, we have just a few questions here. I think a lot of the questions were answered in the chat box. So thank you for doing that. Does the EIDL loan and the PPP loan, is there an end date for applying for any of those loans?
Yes, this is Hilda Kennedy. There is definitely a deadline for PPP. That program is set to sunset. It's set to end Tuesday, June 30th. A lot of lenders have cut off their time for processing PPP loans because of the time it takes to verify the information. We actually had a cutoff as well as of yesterday. But as I mentioned, if there are people on the call who have not applied and are seeking to apply and their loan request is under $50,000, they can send us an email and we can see if we can get you in to apply for any loan requests under $50,000. In terms of EIDL, there is no deadline to apply. Some of you may remember that they ran out of funds initially for applying for EIDL. Just last week, they reopened that, or the end of the week before, they reopened EIDL. When they opened up the portal before, they were opening it up just for businesses that were ag-related, and now any business can apply. The question that we've gotten from people is SBA had capped the amount of dollars that they could lend because of the number of requests. So the requests were for, they were only approving loans for up to $150,000, even though EIDL loans typically could go up to $2 million. As of today, our understanding is those EIDL loans are still capped at $150,000. But if additional resources are provided, then a business owner who has a greater need can go back and apply or amend their application for a higher amount. And if those funds come available, they'll make them available through EIDL over a 2-year period. So that's how those programs work, federal programs work.
Hi, Hilda and everybody. This is Steve Savadilli. I'm a business banker with Comerica Bank. And just a comment on EIDL loans and PPP loans. If people have existing banking relationships, The PPP loans are fairly easy for the banks to deal with. And the EIDL loans, because the EIDL loans over 25,000 take security in the assets of the company, there has to be coordination with the banks to subordinate those EIDL loans when there's existing banking relationships. So I'm running into that. The EIDL loans are directly through the SBA, not through the banks, and there's some coordination that's required between the SBA and the banks on those EIDL loans.
Thank you, Steve. Appreciate that update. There was a question on forgiveness that was answered in the chat, so I'd just like to ask that openly for if anyone didn't get to hear that. But on the forgiveness part, just correct me if I'm wrong, but if you currently have any SBA type of loan, 504, 7A that you've had, there is an ability to get it forgiven. Is that correct, Hilda, Darius?
If you have any SBA loan, you get debt forgiveness for 6 months. So if you have an existing SBA loan, you should have already experienced this, where beginning April 1st, your loan, your debt was forgiven for those 6 months, not deferment. The federal government is paying that loan for 6 months. If you get a new SBA loan, whether it's an SBA microloan, an SBA 7A loan, or an SBA, which is also Community Advantage, or SBA 504 loan, or 504 debt refinance, as long as that loan funds by September 27, 2020, then you will also have access to 6 months of debt forgiveness.
Thank you, Hilda. Appreciate that. There's a couple of questions here that we still have. I know we're running close out of time. Somebody asked, if I received EIDL but was much less than I anticipated, can I still apply for more? Or are there options with EIDL?
This is Hilda again. As I shared, what we've been advised is if you apply for EIDL and it is much less, you can reapply, and if funds are available, you have a two-year window where that can be considered. Right now, it is our understanding that reconsiderations are not readily available because there's so many people still applying for the program. So other resources that are available are some of the things that we discussed on this program, whether that's the Community Advantage or SBA microloan or a CDFI loan, or getting access to, well, state guarantee isn't available because you already have an EIDL loan, but these other programs are available.
Sounds good. And let's see, this question is for Darius. It's asking, I'm not quite sure the question actually, but it's asking, do we offer a Main Street launch program?
You know, Ruben, I think there's some confusion. The Federal Reserve recently announced a loan program to support small and medium-sized businesses that have been impacted by COVID-19, which is separate from Main Street launch. So there's a loan program called Main Street Lending Program that was created by the Federal Reserve, no affiliation to our program, Main Street Launch.
Right. You're right. That makes it confusing. But that federal program is, but correct me if I'm wrong, I think it's for larger businesses, or kind of the middle market businesses, I believe, kind of thing. We haven't been really helping that many people on that just because we don't have a lot of information on it. But does anybody else have any information on the call on that program from the feds?
Yes, Ruben, we've looked at the program, and I just so struggle with the name Main Street because it really, for.
It's not Main Street, right?
Right, it's so far.
Right.
In fact, of course, I wrote my legislator about that too. Could you
Right.
guys have chosen another name for that? It is actually middle market businesses that can have revenues in the trillions, and it's for, and they have to have been very their revenue and net income was positive through 2019, and they couldn't have had many issues but for COVID-19. It is very much so for middle market businesses rather than small businesses. And I understand from several of our banking partners, they are going to take a look at that those clients on a case-by-case basis. They'll be probably their preferred clients that they will serve with that program, and the program guidelines are still being established. They did release some additional information, but again, middle market businesses.
Mhm.
Yeah, that's great. We appreciate that. And we want to thank all of the panelists for their time today. They had some great information. Their contact information is available here, and we'll send out copies of the slide presentation tomorrow so that you'll have that. But please, if you have further questions with them, please contact them directly, Hilda, Darius, and Nestor. If you do need help, technical assistance help with the Small Business Development Center, all that's provided to you at no cost due to funding we get from the SBA, from the state of California, and from generous supporters like Comerica Bank. So that's all things that we can help you with your business. So we're here to help, and you can reach us at 1-800-616-7232 if you do need additional assistance with your business. So thank you once again for everybody being on the call and participating. And we appreciate your time, and please stay safe and healthy out there. Thank you.
Thanks, everybody. Have a great weekend.
Thank you. Thank you, everyone.
Thank you, everyone.
On the call.
Stay safe.
All right. Bye-bye.
Bye-bye.